It's my great honor to start being the presenter today for this webinar. So very briefly, I'd like to introduce to you the speakers of today. So we have Martín Barrios. He's the Managing Director of Global Transition Services at Bank of America, Merrill Lynch, Mexico. So Martín, good morning. Can you please introduce a little bit yourself?
Yes, thank you. Thank you. It's my pleasure to be here today. Thank you very much for inviting me. And it's a big honor to be here on the table with Pablo and Nick, and share this table. So I'm responsible for all transactional banking services for Bank of America Mexico. I've been for the banking industry working for around 20 years plus. So it has been a ride so far, seeing the evolution of the payment systems here and there and everywhere across Latam. So always enthusiastic to share a table with such personalities like we have today. So thank you for inviting me.
Thank you for being here. Next, I have Nicholas Gilbert. Good morning. He's the lead project at Vega. Vega is a consumer product that takes advantage of the speed, low transaction cost, and native asset support of the Stellar network to offer a new type of mobile wallet. Nicholas, good morning. Would you please introduce yourself and say hello to the audience as well?
Yeah, hi. Thanks so much for having me. It's been fun. We've been having an interesting conversation even before the camera and microphone turned on, so I'm excited for what we're going to talk about today. I work for the Stellar Development Foundation, the team responsible for building and supporting and maintaining the ecosystem that's building on top of the Stellar protocol. We're a nonprofit based in San Francisco, designed to advance the mission of the Stellar protocol, which is to sort of enable global financial access in an equitable way. So making sure that everyone around the world has access to sort of first-class financial services. And because of that nonprofit status, we're fully devoted to sort of driving low-cost access everywhere in the world to this protocol and this capability. And so Vega, the project that I work on, is basically the end user use case embodiment of that mission and that vision.
Thank you very much. Welcome, and thank you for being here. I also have the privilege to present to you this morning Pablo González. He's a co-founder and CEO at Bitso. So Bitso is Mexico's first Bitcoin exchange, offering a platform for trading of Bitcoin with Mexican peso. Bitso also offers the highest level of professionalism and security to Bitcoin trading and can be accessed directly at bitso.com. Bitso Exchange operates as a traditional currency exchange with a central limit order book. Hello, Pablo. Good morning. Please, if you want to say hello and introduce yourself to the audience, that would be great as well.
Hi, thank you, Daniel. It's a pleasure to share the conversation with the three of you. I'm Pablo, co-founder of Bitso. I've been on the industry working since 2012, working to build Bitso since 2013, end of 2013. And ever since, basically what we do is connect the local banking, like the traditional financial system in Mexico, with cryptocurrencies and the new digital economy. Our goal is to empower people with their money, how they use their money. There's a lot of challenges, not only in Mexico and Latin America, with financial infrastructure. And this is a little bit where Bitso comes in. So we have the largest exchange in Mexico right now, and we also have a crypto payments app that allows people to use crypto very easily.
Great. Thank you very much. Thank you, everybody, for being here. We see that we have a lot of people attendees. We have 29 right now, so that's great. Thank you very much to everyone to be here. So what about if I make a brief introduction? I have a couple of slides just to introduce to the topic of today, which is self-sovereign identity. If you like, I will just start sharing my screen and just very briefly talk a little bit about that, and then we'll start interacting with each of the actors, if that makes sense to you guys. Very briefly, let me just put here this thing. So as you all or everybody knows, the ID providers right now, we come from the world of the decentralization or the central authority kind of architectures in terms of the IDs. So this is very, very known by everybody. So we have, for instance, in Mexico, the INE, the Instituto Nacional Electoral. So let's that's, for instance, the government that issues an identity card, and that card is for the citizens, so they can make identity attestations at the banks. But of course, that credential is controlled by the central authority. So that's the typical of issuance of a credential, and also the central authority in this case is the government. So this is the least 4 credential-based roles that we can identify. So we have, of course, the subject, the human being, and then the holder, that is the individual or the entity that is in control of the digital wallet, right? That stores and controls the use of given credential, right? The issuer, the individual or the entity who issues or the given credential, and the verifier, that is the individual or the entity who verifies or relies upon a given credential. So this is the very, very 4 main roles, right? So what about self-sovereign identity? So now the thing changes, because now the owner or the identity holder is literally the owner and controller of the credentials, and then he just performs the attestations directly to the entities as needed, and he also controls the amount of data or the amount of information that or the type of information that they are disclosing to each of the cases. Like for instance, if you're in a social media app and you just want to disclose your name, everything else will be obfuscated, like for instance your date of birth, or maybe your citizenship, or other personal information. So in this case, the person is in total control, and this is one of the main features about the self-sovereign identity. So basically, there is like a guideline that I am not going to go to all the 10 points. I just want to maybe just say that the main one, I believe, it's portability. Portability is the the new feature of this self-sovereign identity that allows people to take all their information from platform to platform or from company to company, and that gives a lot of liberty and freedom to the user. The other one is interoperability, that makes that he can use it or she can use her identity or her self-sovereign identity across platforms, right? Finally, I will leave here a little bit this slide, which is the identity blocks. Of course, the new components there is like decentralized networks that we're going to talk a little bit about that. I believe Nick will help us here a lot, because this is where a platform like Stellar comes. Then we have, of course, the attribute storage, where people can store their data, identity registration, key management, which I believe Bank of America will also try to help us here, because this is going to be, and also Bitso, it's going to be very important, their opinion here. Key creation, there's the client, and of course the regulations around it, like the GDPR, which are the new privacy laws and all the regulatory frameworks. So this is like a very brief presentation about self-sovereign identity. I don't know if maybe we can start with you, Nick, and if you can explain us or share with us about what Stellar has as a product, and how decentralized networks can help us to start creating this new world of self-sovereign identity. I don't know if you could be so kind to introduce us what Stellar can help us as customers.
Sure. I think this is a very interesting breakdown that you've provided as well. I've been involved in the blockchain space for 5 years or so, as a side project. So the watching the development of this concept over the years has been one of the more fascinating aspects of the space. But I've only been with the Stellar organization for about 2-3 months now. And so I'm happy to talk a little bit about what Stellar is. So maybe I'll just start with Stellar more generally, and try and contrast it with other blockchains that you may be familiar with. The primary difference amongst other blockchain platforms that you may be familiar with, most notably like Bitcoin, Ethereum, and others, is that Stellar is not a proof of work network, right? So all of the tokens that will exist in the Stellar network already exist. And so there isn't the concept of an adversarial mining network that we are able to close blocks very, very quickly. So our average block time is between 3 and 5 seconds. We can support hundreds to thousands of transactions per second. And we can charge a very, very low cost of, I think it's 1/10,000th of a Stellar lumen. So depending on the price, that can be anywhere from a 1,000th of a penny to a 10,000th of a penny US to process a transaction. So fast, stable, and highly scalable. And that's possible because we aren't requiring people to throw massive amounts of computing power to compete for a large reward. And so you don't see this escalating cost of winning a block, increasing. But though we have to still establish trust, and in a way that we do that is with the Stellar consensus protocol. Some very interesting Byzantine fault tolerant consensus mechanisms that have been built by Jed McCaleb, our our founder, and David Mizrahi, who's with the secure computing group at Stanford. And it's called the Stellar Consensus Protocol. If you're interested in those types of things, I'd encourage you to read up on them. It's an interesting and unique way of approaching the problem. And that's sort of how Stellar is different. And it's similar in a lot of the ways that you're familiar with blockchain. So there are wallets. People have private keys and public keys so that you can send transactions to people and store them in a wallet and exchange that for value. Another key place that Stellar differentiates is that Stellar has a native capability for issuing assets on the blockchain. So it's called ERC20, and this was the thing that kicked off the sort of ICO boom in the Ethereum ecosystem. Stellar has that capability built into the network. And so what that means is that
since day one, before Ethereum,
that's true. But it's the idea is that fundamentally is that you can issue your own tokens for your own blockchain projects and things like that. But really the way that we focus on using it is representing assets, both digital and real world assets on our blockchain, and allowing them to be exchanged amongst each other. And I'll come back to that in just a second, but I want to add one additional feature, which is that Stellar has an exchange built directly into the platform. We call it the Stellar DEX, which is our distributed exchange. And why that's important is because it allows you to trade any of those physical or digital assets that you create on the network between each other automatically without an intermediary or a third party. Was to, for example, issue their reward points on the Stellar blockchain. I could trade my Starbucks gift card points for any other asset on that, whether it's US dollars, whether it's Bitcoin, whether it's American Airlines miles, whether it was shares of my favorite stock, right? So that liquidity between all sorts of various digital assets and physical assets is sort of the objective of Stellar. So when we talk about sort of bringing financial inclusion access to the financial system, we're essentially talking about upgrading the existing system in such a way that those assets can be represented on this platform so that they can be held by individual users, swapped amongst individual users, and priced and traded freely and at essentially zero cost at very high speeds. So that's our overall objective. So the Vega project, the thing that we're building is a mobile wallet that is focused on offering this service in a way that isn't leading with crypto as the value proposition or the use case. In fact, it's our objective that users won't even know that they're using cryptocurrency or stable coins behind the scene.
I was inviting now the group to switch to Martín Barrios. I was reading very interested this news that Bank of America is now hiring blockchain and not just filling patents. So now Bank of America, I believe they announced to have 78 blockchain related patents, and that's a big number for a bank. And I don't know, Martin, if you can please talk us a little bit about maybe something related to self-sovereign identity in the Bank of America, or maybe you like to talk about these 78 blockchain related patents, or just maybe if you can tell us a little bit, how do you see this new kind of platforms like Stellar in your ecosystem? Do you see them as an opportunity to onboard the new ecosystem of startups, or do you see them a little bit as a challenge? I don't know. Please help us to understand how a big bank like yours thinks.
Yes, thank you very much. Look, I'm well impressed and proud to know and learn that Bank of America is so enthusiastic around all the patents that we have acquired throughout the recent years around blockchain. And it's not just the Bank of America, it's just the financial industry is quite interested in seeing how we can effectively use this technology to enhance our services, our capabilities, our arm's length to provide the best-in-class services. We have different challenges, so I cannot talk to you about all the details of each one of the 70 different patents. I don't know them by heart, but I can tell you from our high level view that the relevance of this type of patents is how can we effectively leverage on this technology to facilitate or reduce the costs around KYC, for example. There's a big challenge for all banks. We're highly regulated. We have to know that the business that we're providing, the services we're providing to our clients are to those clients that we want to serve. This is not intended to benefit terrorists or traffic dealers or any criminals. We want the banking system to be as solid and sound as possible. So KYC happens to be one of the biggest challenges. How can we deploy technology to make this easier, faster? All banks are highly regulated from different instances, depending on where our headquarters are. But we know that U.S. banks are spatially regulated, so we can share this technology amongst different banks, to work. Sorry, so how we can share this is one of the biggest questions. Also, we're trying to drive this technology towards the settlement of payments, how we can make faster payments, largest amount of payments. So Nick expressed it very well. So we're in the same line. We want to make more, cheaper, faster, secure. So this technology as well is helping us. We banks are big elephants. It's very difficult for us to move 1 millimeter to the left or to the right, right? So we are seeing all these startups and all these initiatives, all these groups that are being created to work together to make this happen. No, this is an evolving market, and we need to be fast, nimble, to react promptly to the needs that are being demanded across the globe. So that's for the settlements, that's for payments, KYC, trade. We have a lot of initiatives around trade finance in two folds. One, there's a lot of documentation when we want to support a business or a corporation selling to another one across the ocean in different markets. So we need two banks to support each one of the sides of the business. And there's a lot of documentation that needs to be shared. And we need that to be highly visible to everyone. We need to move fast. It's very expensive to transfer a bunch of documents that are flying back and forth and with delicate and sensitive information. So we see blockchain as an enabler to facilitate trade, finance, supply chain, standby letters of credit or standard letters of credit. So these are use cases, real use cases that we're already working. We, Bank of America, worked along with HSBC with a project specifically around standby letters of credit, and then we run another different project with Santander, with Microsoft to make this a reality. So we're just in the proof and test environment. We continue to say that blockchain is the big revelation and the medicine for the future. We still don't find that specific sickness that we want to solve. No, the blockchain is not solving world hunger today, but we know that this is a huge potential, and that's how we envision this to happen forward. And back to the other question around Stellar, I mean, for me, it's a pleasure to meet Nick, and we were talking aside before we started. It's impressive what they're doing globally, and they have a mission and a vision which we all embrace. No, it's how to incorporate the unbanked to the banking system, how to deliver those services that many people are not lucky enough to access, and we should help everyone to incorporate to the benefits of using the financial system, bank or startup or fintech or whatever it is. But I think that the ultimate goal is how do we help to make lives better, no? And whatever corporate bank or startup you are, you know. So it's the same for Bitso. I know Pablo, and we have talked largely about the future of these payment systems, and as well, I congratulate what Bitso is doing in Mexico and how they're growing, and they're doing things right, and they want to make this a better environment to everyone. So we strongly believe that this is a co-opetition world. I don't see that someone told me banks are going to disappear. Well, probably you're going to kill me here. I don't believe that. I don't think that banks are going to disappear. I think that banks are going to evolve, and we're going to coexist for making life better for everyone. So that's my 2 cents.
Yeah, cool.
No, thank you very much. And just before talking to Pablo, I'd like to just briefly talk. This is a very interesting fact about Bank of America for me as a Mexican immigrant here in the United States. Just very briefly, I'd like to, and thank you, Martin, for just a very quick fun fact. Well, maybe it's not fun, but it's admirable in my opinion. So Bank of America was founded in San Francisco, California on October the 17th, 1904. So it's almost a 110-year-old institution, or 115 institution. But the thing is that at that time, Amadeo Giannini established something never before, because Italians, and I beg if somebody is Italian here in the audience, I mean, it's going to be maybe a strange thing, but they were like the working class back there, and there was no access for money or loans to the working class, like we're mostly Italians, immigrant Italians. So this brave man, in my opinion, started a bank called the Bank of Italy in the United States. So let's imagine right now, like some brave Mexican that I believe I know some of the guys that could do it. And right now with Donald Trump at the administration, at the current administration, they will be bold enough to say, well, I'm going to fund the first Bank of Mexico in the United States, right? And then start facilitating all the money and transactions for Mexican immigrants, which is now the working class or the current working class in the United States. So that was happened, and Bank of Italy eventually became Bank of America. I don't know if this is interesting for somebody, but it caught my attention, and it sounds like a interesting fact. So sorry about that, but I believe it's quite a fact. So now we have so for the audience, we have the platform that enables a new kind of services around the world, which is Stellar, and Nick will introduce us of how it works. Then we have a bank that has been in the market for more than 100 years that is aware of the blockchain technologies, trying to keep up to offer services especially for the unbanked, the people that they are not currently reaching, maybe because the regulation is too expensive for them to comply with some population, or there's some issues there. But the thing is that they are right now struggling to get to the next billion people that has not a bank account. And then we have like the exchanges like Bitso that are playing an essential role, which is the connection between, let's say, the old money and the new money. Allow me that particularity or that expression. Maybe it's too, I don't know, but or the fiat currency. Let's talk about the fiat currency and the new cryptocurrencies. So Pablo, can you please explain us how do you see this interaction with platforms like Stellar, or the fiat currency regulated or heavily regulated institutions as Bank of America, and now this new entity called an exchange that is maybe a wallet, is maybe a platform to interact with the world. How do you see the current situation? How do you see the future? I don't know. Please let us know what you think.
Right. No, and you're correct. We see ourselves as this connector between the two worlds. And the interesting thing about the two worlds is that they're extremely different. You have the financial system that's been traditionally regulated throughout time. There's a lot of requirements around who the institution is, right? And who the persons that are running this organization, what are the processes, the practices, and there's a lot of regulation written in legal documents and in paper, right, and in processes. And then you have this other world where it's heavily regulated, but it's heavily regulated by code. It's decentralized, it's open, it's very different. But it works fundamentally completely different. So our job is to play a part on both worlds. We are regulated. We need to do compliance. Talking about identity, we can go into KYC in a second and some of the things we're doing. But and then on the other side, you have the part where you're connecting this other technology, where the use cases are somewhat clear. They're growing, like what Nick and Martin said. I completely agree with both of those things, like the potential for payments, remittances, for trade finance. There's so many applications. We focus specifically on money, on applications around value transfer, around money, around payments. But some of these are developing. I remember when we were starting, I was starting Bits in talking to people in 2014, 2013, telling them about why remittances would be useful, right? With this. And we realized that we couldn't really do remittances unless we had a liquid market that allows you to convert these things very quickly, very efficiently. And it's taken us about 5 years. But some of the things we're seeing right now, for those of you that don't know, the U.S. to Mexico remittance corridor is the largest in the world. It's over $30 billion a year that move. And I remember at that time, it just seemed like a concept that we would be moving money for remittances. And what we've seen, especially this year, we're moving like remittances from the U.S. to Mexico are growing, like that are going through cryptocurrency. It's growing extremely fast. We're moving more than 1% of the remittance market now. It's growing at rates of 5-10% a week. This is through Bitcoin and Ripple primarily. And this is something where there's a person that goes to the store to get the remittance in somewhere in the middle, like in a rural area in Oaxaca, Mexico. They get cash. They don't know they're using crypto or blockchain. They don't care. They just know they get more money. They're a little more transparent, more secure. So it's really interesting because these are little hints of the future to come, right? Like right now, it's over 1%, but with the growth, hopefully soon it will be a lot more. And this is just one of the use cases. You're seeing use cases of imports, exports, where there's a lot of money moving. There's obviously identity, which we will cover in a second. There's so many things that can be done. And these are just it's a very beginning where we start to see like it's not curing cancer yet, but it's starting to change people's lives for the better in many ways. And the other part, it's a friction that there is in the traditional system. There's so many points. Like if you look at the customer journey when they're using any financial services, there's so many friction points. And not necessarily blockchain will solve them, but technology will, I think. I think technology can focus a lot on removing these points where users get stuck. To give you an idea, there's around 270,000 accounts in the Mexican stock exchange. This is Mexicans with any type of investment that's a little bit more advanced than, just an F40 or something. And in Bitso, we have close to 800,000 customers. We have more than 500,000 customers that have Bitcoin. There's twice the amount of Mexicans with Bitcoin than with stocks. And this is not because of the asset class itself. It's because of the friction and the approach that's the user-centric approach that this is having, and the open access and the ability that anyone in the world can access these, whether you have very little money or a lot of money, right? So it's very interesting when you start talking about identity and how you start to maybe discriminate, how you keep privacy, how you keep it democratic, etc. There's so many exciting things to talk about.
So thank you very much. I believe you are talking about a very centric topic of this conversation with all you three very big leaders, which you were talking about friction. You were talking about how difficult for a person is going through these systems nowadays, a challenge. And I believe that's one of the biggest opportunities for self-sovereign identity. You were talking about the customer journey, right? So let's say if the average citizen just go through a KYC process, KYC meaning know your customer, is the process where a bank literally ask you many questions and ask you for a lot of identity or attestations in order to prove that you are you, and you have domicile, you have an address, you have a tax ID, you have everything, right, in order to comply with the regulations, with the law, and also within their internal policies. But this self-sovereign identity, at least in the new world, allows us to just run this friction one time, right, and then use this multiple times. So I believe that's one of the biggest accelerators that we will see in the next decade, because people, I mean, if I have a relationship with Bank of America, I have to comply with their KYC, and then go to Bitso and then comply with an independent and different KYC. And well, maybe in Stellar no, but maybe in Vega as a wallet, I also have to comply with a different KYC. And that's a struggle, because every time I'm as a user, I'm going through all these frictions over and over and over. So what the promise of self-sovereign identity is portability and interoperability, right? So we were talking about those two things. And I believe that's one of the biggest features and the biggest opportunities that there's. The big challenge, and let me just get back to Martin, is if Bank of America will eventually accept KYC done by a company like Bitso, or a wallet like Vega, or even a wallet like me, like I'm a wallet for DNA privacy information. Would that be possible in the future? Would I be able to onboard as a customer of Bank of America using this type of KYC that comes from a foreign entity? I don't know. Would that be one of the things that could be we could see with Bank of America? What do you think, Martin?
Yeah, look, I think it's not Bank of America's or JP Morgan's or Citi's, or it's about doing the right thing for your clients. And KYC, it's all about who do you want your clients to be, right? So I cannot tell Pablo, look, Pablo, you have to work with these clients and do and recognize your clients this way, because it's his business. For Bitso, I'm sorry, not for Pablo, for Bitso, same for Stella, no, sorry. And same for any bank. It's not that, I mean, each one has its own appetite of risk, right? So it has to do with our stakeholders. Look, the soundness of a business is the sustainability of the business. And then we have regulations to comply with. So I don't think it is that one institution doesn't want to follow another one. It's about, we all know what is our purpose, our mission, our vision of how to execute and deliver to our stakeholders, right? So if we want to do things right, we need to be keen about bad people are there and they want to use our infrastructure to execute. I mean, I'm really pissed off with what happened just the past 2 days with this lovely family, the Mormons in Chihuahua. And there's no way that I would like to enable the people that affected these individuals to facilitate them in any way. So whatever I have to do in my role to keep a safe, sound business and not to enable these individuals that are destroying society, which completely against our purpose and what we want to do, it has to do with the way we manage risk, right? So I don't know if I answered the question. It's not that that institution wants to follow another institution. It's about how do we make sure that our business is sound? We do the right thing for the people who want to work, and we serve our purpose and vision. So what do we want the power of connection to for what we do every day? So I think that's the question. So, but let me flip the question to the positive, that I believe we can help companies like yours, like Stellar, like Bitso, and this is what we're doing with Bitso. And we have this discussion. Look, how can I help you to reinforce your KYC? And it's not that I'm a subject matter expert in KYC, but from a banking regulator, if we ever want to help you to execute your purpose and vision, and what you want to do is this is the minimal set of requirements that you should be asking to your clients according to my point of view. So we're happy to have that discussion, and we have undertaken that. And I have been surprised with companies, and I don't know if Pablo is going to expand about what he's doing, but really they have they take this very, very seriously. And I believe that they are in the right direction towards the KYC, understand which are the clients, and I'm sure it's started as well. I haven't tried yours, but I promise to do it because I want to learn. Because we learn as well. It's not that one of us has the golden rule and silver bullet how to fix this, but we all learn. And being in this table, in this type of forums, it helps us to make this more robust. No, that's my humble opinion. No,
Yeah.
I don't know if I answered your question.
No, yes, you did. I don't know. Maybe it's time for a company like Stellar to start helping like both worlds to have like a framework to ease the onboarding process. But let me just or Nick, can you please help us a little bit about what do you think? What, like, for instance, Stellar, there has this product that is Stellar Guard, right? I don't know if you can please talk a little bit about Stellar Guard and how this self-sovereign identity from Stellar could help to like meet the standards of a big regulated bank like Bank of America, and also help like Bitso to or companies like mine or Bitso to comply with all these kind of regulations. I don't know if that would be a fair question.
Yeah, sure. I would say there's a couple things you need that maybe pull apart in the self-sovereign identity KYC question, right? Because fundamentally, as Martin just mentioned, like KYC for a bank is about picking and choosing the customers that you want to interact with, right? And at its core, though, when we are trying to do KYC for other types of businesses, it's actually being able to say, actually, this person, I know who this person actually is. And in the United States, we have this huge problem where our like primary identifier, the secure thing that we were supposed to use for citizens to be able to identify themselves, are essentially in the clear have been available on the internet for almost every citizen in the United States, which is our social security numbers are basically published everywhere. And so the challenge that you see with know your customer or identity is that the expectation that the system was built around, which was that everyone had this, for lack of a better term, like a private key that they were able to give to demonstrate that they were the person they claimed to be, is now available to everyone on the internet. And so what happens is that it becomes harder and harder for an institution to be certain that the person who's claiming to be this identity on the other side is actually the person that they're talking to. And so you mentioned early on, you have to fill out forms and forms and forms of data. And that's because you don't have a secure identifier that only you know anymore, right? Your social security number isn't enough. Your driver's license number isn't enough. Your address isn't enough because, Equifax and health insurance companies have leaked all of this private data through security breaches. And so the question becomes, like, as you keep elevating the level of detail you need to know about your own history, as more and more of that data leaks out into the public, like in many cases, the malicious actors will know more about your history than you will remember in your own mind, right? And so this is why you are feeling this pinch of, hey, I'm getting asked more and more questions, and people are less and less trusting of me because the information that's supposed to be exclusive to me is no longer exclusive to me, and I'm falling down on my ability to identify myself to the organizations that I want to do business with. So the interesting thing about your self-sovereign identity thing is that why I think it's important for us to separate KYC from sort of the identity and the claims about an identity. It's important to understand in the business context what it is that you're trying to ask and what it is that you want an answer to, because the solving the problem of knowing who somebody is explicitly is only going to get harder over time. But the question of, like, is this person credit worthy? Bank of America is like really, really well equipped to answer that question, to say to me as a business, hey, this person has at least $10,000 in their bank account and has had a relationship with me for 10 years. I don't need to know anything else about that person to extend them a payment plan on a product that I want to sell them. So like that's a claim that somebody can make and attach to an identity. And I trust Bank of America, so therefore I will accept this person as credit worthy to make a purchase, right? And so that's completely divorced from the idea of, like, do I know exactly who this person is? Because that's sort of your first step. But your second step is, like, what do I need to know about this person? How do I understand who this person is, what their capabilities are, what I should trust them with, and those types of capabilities. And so I think the problem of the know your customer piece is only going to get harder until governments or some other entity step in with a scheme that is, probably closer to what a SIM card looks like than a national ID card, where you're able to issue these things to people once the government asserts that you are who you say you are and that businesses can rely on them. Because the current path of asking customers questions to validate who they are, as I mentioned before, is doomed to failure, because as institutions collect that information and then lose it out the other end in data breaches, which that information is incredibly valuable and a target for hackers and malicious actors all over the world, that problem only gets harder. So we just lose ground year by year, day by day, as that more of that data gets out into the public. And so that is not a problem, that's not a solution there for businesses, because on some level, I guess the point that I'm making is that nobody's security is perfect, and these breaches are bound to happen. And so the more questions you ask, the harder you make it on users, and the harder the more vulnerable you make users when that information invariably gets breached, right? And it's not that every company will get breached, it's that if everyone has to ask those questions, only one company has to get breached. And
it can be very dangerous. I just want to add, because it's fascinating what you're saying.
Please.
Oh, go for it, Daniel.
No, sorry, Pablo. I was telling you, yes, please, Pablo. If you want to add something, please go ahead.
Yeah, I just find like you need to separate, as Nick says, your identity, my digital identity. How do I have control and I can manage that digital identity, from whether a business wants to have, or like whether a business can have a commercial relationship with you, right? Like a bank or a financial institution. So I was just in China a month ago, and it's fascinating what's happening there. Basically, what's happening in China is that every cell phone number is unique to a person, and it's tied to an ID, to a passport, to your national identity. So you cannot have phone numbers that are not tied, like they're all tied to a unique person. And you can complain a lot about China and a lot about some of the privacy issues that they have, but it's just very interesting. And this is a centralized identity system where a state says, hey, everyone, like, let's go in the same direction. This is the way it's going to work. And suddenly what happens, it's an explosion of access to services, whether they're financial or non-financial. You're seeing numbers where, like companies like WeChat have like almost 1 billion users interacting with money there. Alipay 700 million. Like it's insane, the amount of people that are already using digital services, and so now it becomes about data, right? They're very aggressive about data over there, and who's trustworthy, who's not, who can get credits and loans, and but it's very interesting how convenient it makes life for people. One of the issues is that it can be used on the incorrect ways, and I think one of the big developments one of the advantages of using blockchain for this is that you can be the owner or the person in control of this information. In Mexico, they try to do something similar with the FIEL, your firma electrónica, and where that's your digital identity. But it's very problematic because one, is not mobile. Everyone's mobile in Mexico. If you compare desktop to mobile, it's ridiculous, and desktop's like decreasing, mobile's increasing. It's hard to use. Everyone associates it with, it's just for taxes, so I'm not going to get one. They give it to their accountant. So now their accountant has access to hundreds of different identities. So from there, like, it's not a secure identity system. And this is a point where 99.9% of the population do not understand how to secure their data like properly. Like they don't understand the implications about some of these things. And I think it's gonna come up to, like, there's a lot of services, companies, products, technology that's being developed that allows people to secure the data without being experts on cybersecurity, on cryptography, on all these different topics, which are very, very niche and very subjected to a very small part of the population. So I think it's a matter of time where everyone's really like holding their own money, their own identity, their own, but we still have a long ways to go because there's a lot of friction, and you don't want to be giving some key to your accountant that has access basically to your entire life, to your money, to your identity, that they can do horrible things with it. So there's a lot of friction still.
No, thank you. The case of China, as you mentioned, is very interesting because then some voices will say we have to get back to centralization, right? Centralization works, it's more convenient. You have a central authority that assigns everything, and everybody trusts, in between quotes, and I put it in between quotes because they have enough power upon the citizen to say, well, I'm the only option, right? The thing is that with China, the government never changes. I mean, it's always the same party, the same rulers. Maybe they change a little bit if they get old, but they have continuity. I mean, they have grown. And in our democracies, well, at least still in Mexico, let's see how the years are by. But what I'm trying to tell you is that the system changes from democratic to Republican, or from one party to another, and then you have like more liberty and more rights toward the people, and then these blockchain-enabled platforms or these blockchain platforms allowed people to have, or the edge computing owners to have more liberty and more space, and then you'll have to take care of a private key that you were also mentioning, and then people is learning to use a wallet to keep that private key, and then you have custodian wallets and non-custodial wallets. So it is becoming really, really hard. It's becoming a challenge. But I believe, let me just put some ideas of my own, some idea that also new, younger people are getting used to it. I believe they right now they are asking for personalized services, signing on with Facebook account. So I don't like that, because Facebook is, well, I'm not to go there, but they are making attestations using Facebook and Google's kind of account. So I would rather be more comfortable in a world where I can sign using my bank account, my Bank of America wallet, or my Visa wallet, or my Vega wallet, or even my Genobank wallet, right? Because now we really have stake at risk if we are signing things that are not legal with these kind of wallets, because now I'm risking things like maybe my transactions within Bitso, maybe my fiat currencies, or my operations with Bank of America, or with the transactions that I'm doing through the Stellar, or even my DNA information that is stored in my wallet. So I see like a world in the future that maybe you will have to aggregate different signatures coming from different wallets in order to utilize this kind of. But again, it's a lot of friction. I agree. It's kind of a very difficult way to prove in a digital world that you are you, and this is becoming more challenging because, as Martin was saying, I mean, the compliance and the privacy laws and the anti-laundering money and all the laws are there. They're very strict, and you need to differentiate the bad actors from the good actors, and without putting too much burden on the good actors to come on board. Gentlemen, I don't know. We have a little bit more minutes. I don't know if you want to comment a little bit more. If you want to wrap up, tell just last maybe 5 minutes each, if that agree, and then we can open to some questions of the audience. And of course, with a lot of gratitude of you to spend this amount of time with us. How can we start with Martin? Maybe, I don't know if you Martin wants to add something. How do you see the future? What would you like to see in maybe in Mexico, Latin America, maybe in the United States with this kind of technology?
Look, well, thank you. First of all, it has been a pleasure to be here today, Marco. Thank you very much for the invitation, having us all together. I would love to tell you the magic ball, how it looks like, but what I can tell you is what we're doing today is we're shaping the future. So I strongly believe that it's in our hands. We have the potential to shape it in a way that this is a better world that we want to work, and whatever it is that we're doing in whichever job or task or mission you're working on, we just need to make sure that we're shaping the future in the way we envision it. No, we need to have a positive impact on society. If we're not doing that, shame on us. No? So on the same side, we're doing business. We have shareholders, we have stakeholders, we have communities to enable, we have people that want to work. You talk about working class. So we need to help communities to stand up and do better and make our lives better. No, so I think that's a common thought that I've heard out in this table, and I'm very pleased to share a table like today with people that think alike in towards this direction. So it has been a big pleasure for me, and thank you for the invitation.
Perfect. Thank you.
Thank you. Yeah.
I think that other than, my dreams for people to be properly empowered with money, what I would love to see the world move into, it's a lot about consent. We didn't get a chance to talk too much about something like GDPR, right? We're regulated in Europe, we're licensed in Europe, and we're GDPR compliant. And that's about like allowing the customer to, it's central, like it's governed by a regulator, but it's about allowing the customer to choose how other companies can use their data or how they share data or your data or not. And it's still not correct, in my opinion. I think that we underestimate the power of your digital identity, your own data, and I would love to see a future where you're actually in control of what happens. And when you can do that, maybe the future where you can have an identity and like a KYC package, and you can just go open an account with Bank of America, with Vega, with many different services. It would be pretty simple. But I still think there's a lot of challenges for us to get to that world. And I also think there's a lot of education that needs to be done to, like, until we get there, that needs to happen on the masses. Like you're in the US, they're a lot more, they're getting a lot more aware about privacy, like even millennials, and but here, like, I notice, like, most people don't understand or care or realize about the importance. We're in a large tower in Mexico, in Reforma, and I just gave my ID to get into the building, and every time I do that, I get really paranoid, right? Because I don't know what they're doing with it. They're taking photocopies of it. They're using it. Well, probably they're not. I need to trust the tower. Otherwise, I cannot get in. I couldn't be in this webinar. And it's not correct, like the way that we're identifying people and the power of things you can do with a stolen ID right now. It's pretty interesting. So.
Yeah, and I would say, this has been really fun and interesting conversation, and I'm really glad I got to do this. So thank you guys so much. And I would just touch on a point that you made earlier around the sort of increasing amount of expectation that we have on consumers. And I'm very much heartened by the fact that, I don't know if you saw that Samsung released this embedded blockchain capability into their new phones. And what's interesting is that Samsung is always about their hardware guys through and through. They build the best, most interesting hardware into their phones, usually about a year before everyone else, which means that most likely in the next product release for the Google phone and the Apple phone, they will have these like secure hardware wallets built into the devices, right? And so I think what you'll see is you'll start to see the device manufacturers start solving this problem for us in a certain way by enabling the devices to securely hold data, particularly keys, and start solving some of these problems for us, because it makes sense for them, because it pulls the phone closer to being the center of your world, which is all they really want, and it gives them an opportunity to sell you more services and all those things. So I think that's one thing. The other thing I would say is that what I think is interesting to watch is that my theory is that banks like Bank of America will end up displacing telecom operators as sort of the place that we get those devices from, because if your experience with your bank is like yours is mine, like I've never had a problem with my bank not like having somebody walk into the bank and pretend to be me and transfer the account ownership to them. Right? Mm-hmm. Cell phone providers do that all the time, right? When the phone becomes the center of your digital world, like your providers that provide cell phone service, they're not equipped to manage those secure financial asset that you have, right? You mentioned in China, the phone number is tied to your identity. Like if you were able to swap that phone number into somebody else, like you have access to all of their money, right? And so the question is who's best positioned to solve that problem for you, right? And my guess is that forward-looking banks will be those companies, because the companies like I'm a bit of a Bank of America customer for 20 years, so like I've seen the growth and the change in the way the branches are laid out, the focus on selling add-on technology services on top of your home loans and all these things, right? So I can already see it moving that way from my just personal experience with Bank of America, and I would guess that a lot of the other banks are going to go that way as well, because they understand the value of your identity, right? They knowing who you are, having a relationship with you, it's not worth $50 a month to them. It's worth way more than that, and so they built the infrastructure in place to support it. So I would suspect that that's the direction it will go, but not all banks will follow that pathway, right? Some will push back and probably end up on maybe the right side of history or the wrong side of history. Only time will tell.
So that's a super interesting idea, Nick, about banks absorbing telecommunication services or being now like they can evolve as a telecommunication platform. So maybe we will see in the future a merge between AT&T and Bank of America or something like that. That'll be super cool to see. Because you're right. I mean, yeah.
Daniel, just real quick, I want to give a shout out to a stellar project called ocasión. They're doing like mobile phone minute like marketplace built on top of Stellar. But they work with they're doing a lot of work here in Mexico around like rebranding mobile networks for institutions. I think they're working with some financial institutions, but I've just mostly seen it with like brands and things like that. But so if you want to see a version of that in the real world, you can check them out.
Awesome. Thank you very much. Well, what about if we can open a little bit the webinar for questions of the audience? Of course, the questions can be either in English or Spanish, and we will, of course, be able to translate them. So we have now 20 attendees. So thank you for bearing with us. Thank you for staying the whole process. So do you have any questions? Anyone in the audience? You have the top leaders right now. So please go ahead and ask something. This is a big opportunity for us.
Actually, we have one of Esteban Martinez. What's the difference between Stellar's digital identity, Vega, versus Hyperledger's Indy? Pros and cons.
Yeah, so I think what's important to understand about Vega is that Vega is a mobile wallet that's designed, it's built on top of the Stellar network. But is designed to look and feel like Cash App or Venmo if you're in the United States, Apple Pay, things like that, but cross-border available to anyone in the world, right? So those products are not, while they may have like crypto options, for example, in Cash App where you can buy Bitcoin, our objective is not to build a mobile wallet that people are using to buy cryptocurrency, not because we think that's not a valuable use of people's funds, but because there's lots of great wallets out there, like Bitso. You can go to Bitso and buy cryptocurrency today. What we're really trying to solve the problem for is make this really simple for our parents, our grandparents, aunts and uncles to have access to this new technology, be able to pay on their phone, whether they have a bank account or not. can they get access to funds to transact on the internet, right? Like the statistics are staggering if you look at how most people through Latin America engage in e-commerce. Many of them have to go to a retail store to pay cash for something that they want to buy on the internet. And oftentimes they pay large fees for that. It's inconvenient, and you lose the value that many of us take for granted of being able to, pay for Spotify or pay for Netflix or do whatever you want to do on the internet and buy all those goods and services that are out there, right? So they're missing out on that part of the world. We want to solve that problem for them and a bunch of other problems that are out there for people that don't have access to ways to pay for things online. So as part of that, we have to build digital identity, because while we're a non-custodial wallet, meaning we don't hold the user's keys, that's a regulatory and legal definition that we need to deal with. But in reality, we need to make it possible for grandma, grandpa, mom, dad to lose their phone, break their phone, lose access to it, lock themselves out of it, and still not lose all of their money, right? And so this is part of the core challenge that we're trying to solve right now. So we are not building an identity layer in the sense of like competing with what Hyperledger is doing or any of the other great projects out there around building identity. We would be customers of theirs once we find the right solution for those capabilities. So if somebody was able to figure out how to get everybody in Latin America with a digital identity, we would adopt that in a second.
Thank you very much, Nick. So, Marco, is there any other question from the audience, or maybe we just just a
last one.
Okay.
Okay, this is to Martín and Pablo. Do you think exchanges are going to be the next bank to keep their keys?
Okay, let me start.
Please,
you kill me then.
No.
No, I think that the purpose why you use a bank is not going to be the same of the purpose you use a wallet. So having said that, it's not that one going to replace the other. One is never leave the other one to grow. I think it serves two different purposes. So in my mind, I don't foresee that will happen. So you have people who want to have a wallet for a purpose, no, and people who want to save money for another purpose. I'm not going to be popular with the statement I'm going to make. I'm not into cryptos to make myself rich. That's not the reason why I have cryptos. I have cryptos because I want to understand how it works. I want to see how it enables whatever positive purpose has. So I don't believe that that's the reason why I would like to keep my money safe, where I trust my money is going to be safe, it's going to be productive, right? That's one stance, and that's the purpose of a bank is for lending, for credit, and credit's purpose is to grow and to have a better life in whichever way, community, society, individuals, family. It's completely different. The purpose of a wallet, I see a different reason. So I don't see how this. I'm sorry, I may be missing something, and I would like to be enlightened and understand that question. If I'm missing something, I would love to learn.
I think it's super interesting what you say, because first I agree with you with cryptocurrencies for becoming rich, or for me the price of crypto is the least interesting thing about it. The interesting point is where money itself is changing, right? So the services that are built on top of money need to change as well. We have a very interesting mission. I don't know if I should say it with you present, Martin, but our mission is to liberate Latin America from traditional banking, and I mean traditional banking as it is now, because it's not serving people, right? So I think banking will have to change, and I agree with you, because the way that people use their money and interact with money, it's going to be very different, but you still need access to capital. You still need the big markets where you can loan, you can accelerate the economy. And I think there's a a really good space for world, right? But I think it's going to get a lot more segregated about who's offering the service. Like Uber Money just came out, like Uber is like doing now financial services, like very interesting, right? And it's just we're looking at like not only fintech but with blockchain, with crypto. There's a transition, and the way that money works will be very different in 10 years, and the way that people interact with the money. And going back to China, like it was just, like my head exploded about like how people use their money so much different than what we're used to in Mexico or the US. Like in the US, they're still like talking about like credit cards and NFC, and like that's like forget about that. Like those guys are like so much farther ahead, right? Mm-hmm. So we should be really pushing the things like blockchain that are really the next frontier of money, and not talk about like payment processors and switches, and like that's just like I don't think that's working for people.
Yeah, and if I can add on to that, I believe in a cashless environment, and I think this is where we complement.
Yes,
and eliminating the cost of cash handling will lower down a lot of basic product costs, and this will be better. So I do believe that's a good angle that we should be working.
Something very last thing to add. I agree with you. And one of the things, for example, that I say a lot to my team is that if we're successful in doing what we're doing, we're going to be unnecessary because we're a centralized exchange. You keep your money with us. You need to trust in us. And if we're really successful at bridging these two worlds, maybe we'll just be an interface that people use, right? And that it works on a non-custodial fashion, or something like that. But you're gonna have, like right now it's very black and white, and I think there's gonna be like a big shade of gray where there's gonna be a lot more services that make life a lot more convenient. And sorry again to check in on China, but it's just very interesting to see how the relationship between banks and fintechs and how developed that is. Where you even have banks checking with not only fintechs, but like an Alibaba, like, oh, is this person trustworthy? Yes or no? And Alibaba says, yeah, like this person will pay the debts, right? Rather than the other way around. Mm-hmm. So it's very interesting. Like the entire dynamic is going to change in the next 10 years.
Yeah, and I'll just say that one of the things that makes Latin America so exciting to me, like when I signed up to do this role and work on this space, is that it's exactly the point that you're making. The reason China is so advanced is because they skipped everything that the United States and Western Europe had developed in terms of a payment regime and jumped straight to the bleeding edge, right? And I think Latin America has an opportunity to do that, right? Obviously, it's a bunch of different countries that have to make decisions to make that possible. But you know, the truth of the matter is the economic model that the American system is built on will not translate outside of the United States, because you know the card-based transaction fee structure where you're paying 30 cents a transaction plus 3% of the transaction, like will make most transactions for people in developing parts of the world uneconomical. So the question is what do you replace that with, and what does that look like? And so sure, you could say, well, we can negotiate with the card providers and the acquiring banks and the payment providers to lower those fees to something reasonable in the space.
With the 8 parties that are involved in it, or 10 parties that are involved in it,
or we can come up with a way that works, and that doesn't a way that works that looks like you said, like digital cash, where you don't use cash, but you pay on demand, and that's enabled in this new world of technology. And so that to me is the most exciting part. There's so much growth happening here. The population is young. There's so much opportunity, and I see a world in which you guys end up more advanced than China, right? Because the same thing, I mean, if you look at history of economic development, post World War II, the Japanese shot ahead of everybody in the world in terms of their economic development, the technology that they used, because they started from a blank slate. And but eventually they fell behind. And the same thing with China, right? China is in the lead right now, but somebody else comes in and deploys new leading edge infrastructure, and they jump ahead, right? So I think that's the exciting part for me about all of this, is like, this is very much the frontier. There's the need here. There's the economic growth. There's so much opportunity, and the outcome, as you mentioned, is like is a great thing for the world, because there's so many people that will have access to this amazing world of services and capabilities, and start their own businesses and buy homes and do all the things that colloquially we call the American dream, but it's just the dream of everybody in the world to live a better life.
Yes.
No, thank you, guys. This has been an awesome conversation. I just want to thank each and every one of you. I was thinking right now, because I saw, because we just touched like the self-sovereign identity part of the financial services, but maybe we could always think or talk about, like, for instance, voting, right? Like using this kind of technology to make an attestation on the political side. There's multiple use cases for this kind of technology, but the one most dear to my heart is exactly this. Like blockchain at least has enabled conversations that otherwise would be impossible or left out. And what I'm trying to mean is, we look around us. We have now a top executive from Bank of America talking to us. We have the CEO of a new kind of bank or exchange or new entity, that is Pablo. We have one of the top, inventors or CEOs as well, with you, Nick, with Vega wallet, that you got acquired by Stellar because you did an amazing job. And we have Mark and Anthony and Camila with Blockchain Academy, that is more in the educational part. So this is a new world. This is exciting, because now a lot of conversation is happening. As you were saying, Pablo, money is changing, and we are going through the old one type of money that serves every purpose to fragment the money and tokenize it. And then now we have tokens for equity. We have now utility tokens. We have proof of work tokens, and so on, and proof of stake, and so on and so forth. So that's really exciting. And but the main thing is that we are here. We are open. We want to enable conversation. We want to enable a better world. And I will leave you with that, with all my gratitude of being here and being hopefully a good facilitator of this conversation. My special thanks to Mark, to Anthony, to Camila, and all Blockchain Academy team for enabling this. And I'm here to serve. Thank you very much. And if there are no additional questions of the audience, that I believe we can close our webinar if you don't have any other additional comments or something.